In fact, let's hear it then from K. Subramanian, the CEA, speaking about the FPI surcharge.
Extremely nervous on this surcharge issue. The finance minister has indicated that probably this is not the time for a clarification. If need be, we'll speak in the parliament. But looking at the overall policy approach of the government, do you think that there is a requirement for a review, or this is the way to go and the message needs to go out?
I think, given that the finance minister has already, clarified on this, it would not be appropriate for me to say anything more on that part. We will be deliberating, either which way, and so I think leave it at the FM's, Honourable FM's, statement on that. But what I would say is that, especially, when we having been a professor of finance and understanding stock markets very well, what stock markets oftentimes take some time to see through some of the bigger messages, bigger ideas, and that's very important to remember. And I think if one noticed in the finance minister's speech, part A was almost entirely about the vision for the $5 trillion economy, the emphasis on infrastructure, which is, huge sums being talked about. She spent about 25 minutes on investment and, triggering this virtuous cycle. That's the word she used, the virtuous cycle as well. So I would, urge the market participants to actually to look through the long-term impacts and factor that in. Finally, stock prices are basically the discounted value of all the future. So what is in the future should definitely get factored in enough is something that I would urge market participants, especially the vision for the $5 trillion economy, because the survey talked about it. We've sort of chose to not get into the details on the investment part, but the budget really got into all those details and outlining that, and that to me is, I think, very important, which the market participants should definitely make a note of.
Perfect, sir. So one more quick question. A lot of feedback is now coming in on the idea of the issuance of the sovereign bond. You did mention very briefly that there are risks associated. So do you think that the time really has arrived, and when do we see the conclusion of discussions within the ministry with RBI going forward, size, so on and so forth?
See, I think what I would want to clarify is that whenever we talk about risk and return, we have to talk about them in conjunction. You can't just focusing on risk without the return, or return without the risk. For instance, if you were to, let's say, read in a newspaper on the front saying, I'm going to double your money in a month, you have to ask, where is the risk, right? Similarly, if somebody tells you that this is risky, then you have to ask, what is the return? That's, I think, a cardinal principle. Well-managed risk is something that you have to, sort of think carefully about and take when the opportunity presents itself. And as I have already explained, there is an opportunity now, given the benign interest rate environment, and also, there may be other, positive feedbacks that will come in, which we have which we have factored into in our thinking, but maybe, we will at the opportune moment, talk about. For instance, what the spread may imply about the, about the rating. These could be, spillover effects which we have to keep in mind. I'll just end by saying that, I've used this example before. If you want to, eat, you have to light fire. And you can manage that fire very well so that you're able to cook and at the same time not burn your fingers either.
So how much costly would it be to go abroad and raise money, because yields even in India are coming down?
No. See, the yields actually we're talking about are 50 basis points, etc. In contrast, if you take a country like Japan, the real rates of interest are negative, and they are, they will be, will be negative as well. So there is a significant differential here. I think, we've outlined the thought behind it, and we are very much cognizant of, of what we need to navigate carefully. And so let me assure everybody concerned that as someone who's basically taught risk for a living, I understand it well. I understand risk and return well, and we will basically